The stock market has been bouncing the past week, and we've seen some household names make really good moves to the upside. None more notable than the widely covered Alibaba. In the past week, it has gained around 7% in its value, and in the past month, it's up around 17%. Now, if you manage to buy near its lows at around $140, then you'd be up around 27% in less than 2 weeks. However, you need to bear in mind how much pain this stock has actually been through. We can see the past 6 months was still down 23% from what was already, in a lot of people's opinions, a very low price for Alibaba. And the pain might not be finished yet. Just because we're seeing a bounce to the upside doesn't mean that it's going to continue going towards the upside. But we'll talk about what it means in a moment. And for reference, I'm still down around 10% on my Alibaba position, so I'm not in the clear just yet with this. And then most super investors who bought the stock are most likely still going to be down around 20 to 25% because most of them bought in that Q1 and Q2 period when it was up at around 260 all the way down to 190. And a lot of people, including me, thought that was a very low price for Alibaba. No one really saw it going all the way down to 135 or 140, apart from very intelligent people who know exactly what is going on in China and know why you shouldn't touch them. But the questions that we need to think about here as potential investors in Alibaba or investors in Alibaba stock at the moment is the rise back up going to be short-lived? In theory, if we're long-term, we shouldn't care much about this, but it's good to analyze and understand the situation just to understand the opportunities and risks that are being presented. And then the second question is, even after a 20% rise or the 20% rise that we've seen, is Alibaba, by some opinions, still one of the best long-term opportunities available in the stock market? And for this, we're going to be recapping on our intrinsic valuation of Alibaba and our DCF analysis, because it's been a while since we've looked at the scenarios we penciled out for Alibaba and then tracked them against it. So we're going to be doing that in this video and trying to rationalize why Alibaba may be having such a strong move to the upside at the moment. I think one of the areas in which we can look at as a potential reason is the super investor ownership that we have. Not exactly that the funds that these investors put in move the stock upwards. I mean, they could do. These are investors who manage billions and billions of dollars. However, I don't think it's that. I think super investors will have something to do with the sentiment. And when we see people like Charlie Munger doubling down on his position in Alibaba, we can see here increasing it 82% in the most recent quarter, probably buying around that $160 to $150 range. So he did get, obviously, a decent price in this most recent purchase, but his purchase before that was in the 220 to 200 range. So we can see here he's doubled down. And I think that was obviously a very good sign for people in the value investing community and people who are followers of Charlie Munger and people who are already in Alibaba. Not all of the 13 Fs are out at the moment, but we can see that Alibaba has been the most popular stock with super investors in the past quarter and in the past 2 quarters as well. Essentially, it's been the most popular stock for super investors in the whole of 2021 to date in terms of new purchases into that stock, which is very interesting. And I think, we could look at it and all of those super investors could be wrong, but it's definitely something that improves investor sentiment around buying Alibaba and recognizing it as a good opportunity at the current prices. Now, the other bit of news that we had come out as well is that Alibaba is launching new server chips to boost its cloud business, to challenge the likes of Amazon and Microsoft, which is very interesting because I think everyone knew that Alibaba Cloud could be a dominant company in its domestic market, which is China and maybe Asia as well. But the fact that it's trying to build a global presence or at least compete with the likes of Amazon and Microsoft by developing its product is very good to see. And obviously this is something that Alibaba investors or people around Alibaba would get excited about, given that it's already a market in excess of $150 billion per year and it's growing at a clip above, say, 20 to 30%. So it's a very fast growing industry. If we compare Alibaba with the likes of just Amazon Web Services, which is Amazon's cloud business, they done around $45 billion in revenue last year for AWS alone. Alibaba's annual revenue as an entire company is around $100 billion. So to put out comms stating that you're trying to challenge those businesses in terms of their size and their capabilities is something that a lot of investors would probably get excited about. And although we don't have enough information at the moment to actually know whether this would enable them to compete or even get up to the likes of Amazon and Microsoft in terms of size of their cloud business, and it doesn't really matter much at the moment. It is something, again, that will push sentiment to the upside or change sentiment around slightly. And we've also had Jack Ma appearing in Europe somewhere with his fellow billionaires sailing around in Spain. Again, doesn't mean much to Alibaba, as he's not even involved in Alibaba anymore. He is obviously the founder. The only direct involvement he would have is through Ant Group, which is 30% owned by Alibaba. So again, these don't really mean much. Neither does the super investor sentiment in terms of the business and what that is doing. But I think one of the main areas we need to look at here is the fact that there hasn't been any new news arising from the Chinese government in terms of what they're going to be doing to regulate Alibaba and the other tech companies in China. So we've got the combination of less fear, uncertainty, and doubt, which is essentially what was driving the stock down in the first place. Plus, we have some fairly positive fundamental news. And we can see a correlation in the stock price, or at least some correlation in the stock price. It started to get a bit quieter in terms of China's regulatory entities and how they were targeting Alibaba, Tencent, and those companies quite specifically. It started to quieten down around the start of October. Now, since it's gone quiet and we've just seen good fundamental news, we've seen a 22% move to the upside. Now, this could be coincidental, and again, I'm not saying that it means a whole lot, but it's definitely something we need to think about going forward, because I think if we continue to not hear much from the Chinese regulatory entities in terms of how they're targeting Alibaba and the tech companies, and we continue to see fundamentals improve like they are doing in flying colours at the moment, then I think we'll start to see a lot more moves to the upside in Alibaba and maybe get back up to the levels in which we saw at the beginning of 2021. And so now's a good time, I feel, to answer the second question that we had, which is at $170 to $180, is Alibaba still one of the best long-term opportunities out there at the moment? I think the answer to that is definitely yes. We've got our 5-year DCF analysis that some of you may have seen, some of you may not have seen before, essentially putting out a hypothetical plan for Alibaba in terms of their financials, how much free cash flow they are going to be able to produce to us as shareholders of the business, and then we're discounting all of that back to today's date, or back into 2020 when we originally did the calculation. So you can see here, just tracking against it, I put them in as having around 35% growth in 2021, which they're already seeming to exceed. 2022 onwards, that drops down to around 25%, because you have to appreciate there is going to be some momentum there. It is getting to big numbers, so realistically, you should be looking at growth becoming harder to sustain at that 30% plus level. But I think 25% is doable if you ask me, especially considering how big their market opportunity is. But besides that, we can see tracking against it, the 2021 fiscal year ended in $109 billion versus $997 expected. I put in $121 billion as 2022. They're guiding for around $140 billion. So they're seemingly ahead of where I estimated them to be anyway. So this DCF here, this base case that I had, is still very much on track. And remember, we were accounting for some of that ESG investment as well, that they said that they're going to be pledging towards common prosperity in China. We just went ahead and said that that will be coming out of the free cash flow. And the result of all of those calculations is that we still have a fair value based off a 15% rate of return of around $285. So there's still a lot of upside. That's a $785 billion market cap for Alibaba versus around $480 billion where it is today. So on that base case, still looks like it's a very good opportunity. And on the bear case scenario that we see here, where we've slowed growth down to 20%, again, this is fairly realistic in terms of the growth. They get to around $200 billion in revenue by the end of their 2025 fiscal year. If you ask me, I think they should clear this. $140 billion is what they're guiding to be at the end of this year, or first quarter of 2021, and we've got that in for the full year 2023. So they're way ahead of this DCF forecast that we have here. We have some multiple contraction as well, which some of you may know with Alibaba. I actually think there's the potential for multiple expansion when you factor in cloud becoming more profitable. You factor in that the EBITDA margins for the core commerce section of the business is in the high 40 to 50%, and that's essentially funding all of the other smaller parts of the business some of the loss-making parts of the business. So when you actually unpackage Alibaba, the margins are a lot better than they have been showing in the past few years, especially on the gross margin and EBITDA side. But without getting too complicated, we are accounting for some multiple contraction here, which some of you may want to see to be more conservative. And even with this, we're estimating we'll reach a terminal value of around $930 billion in 2025. So not huge, but around double from where it is now. That gives us a fair value, again, based off a 15% rate of return of $188 per share. So even at today's price, where we've had that 25% run up, on a bear case scenario, not the most bearish case scenario, I will say, obviously, you have the risk that this investment could do a lot worse than that. Could go to zero, like some people say. There's always that, so you have to keep that in mind. But even after the recent rise, it does look like a good buying opportunity still if you are fairly bullish on the prospects of Alibaba. Just a glimpse at the IRR calculations that we've had for Alibaba. We've got the base case, which I feel is the most likely, the bearish case, and I've called this one the worst case. I will just beat that drum again that this is definitely not obviously the worst case. It's trying to just emphasize that this is worse than the bearish case and worse than I realistically see it being. And in any case, you see an IRR versus today's price that's in excess of 15% and my required rate of return. So that probably gives you a good hint as to why I'm bullish on Alibaba, and it is one of my largest positions. But to answer that question that we had, even in today's price of $178 per share, I don't feel it's too late to get involved in Alibaba. But then again, we do have the possibility that this could just be a short-term leap up, a short-term leap to the upside, and that we could be going back down and revisiting that $140 mark. Again, I do just want to point out that this isn't a risk-free bet. There isn't just upside potential in Alibaba. Like I've said in previous videos, I will just recap. You have the risks like the VIE structure that could at any time be abolished by the Chinese government. That would therefore prevent foreign ownership in Alibaba as it is a Chinese operating company. You also have the possibility that they get delisted from the US exchange, which isn't a huge problem because a lot of companies do trade over the counter, and also you could swap it for the Hong Kong exchange if you absolutely had to. But I think all of these risks are fairly unlikely, and that's why I'm bullish on Alibaba, but never say never. And obviously you need to build your positions or not build your positions according to your risk appetite and how you feel about the situation. And again, this could just be a short-term move like we saw back in August where it moved up 10% in the space of a week. This is a lot bigger move, a lot more meaningful, I will say, but it did get to a more depressed level. So there's always the possibility that it shoots back down. But I think it's important, like I said at the start of this video, for us to understand what might be happening, what could be the catalyst for moving Alibaba back up, and then recap on whether it's actually still a good buying opportunity, which in my opinion, I think it is. And that's going to be all for this video, guys. Thank you all for watching. I'll leave a link to the Patreon for anyone who's interested in supporting the channel and the content that we make here. You also get exclusive access to analysis that I do on the side that doesn't reach the YouTube channel around stocks that I'm looking at and potentially buying. And you also get access to my portfolio, among other things. So go check that out if you're interested. Apart from that, if you could leave a like on the video, I'd really appreciate that. Comment down below. Let me know what you think of Alibaba. Has the situation changed? Is it ready to rise up to its pre-2021 levels? Also, subscribe to the channel if you're new around here. And apart from that, guys, I will see you in the next one. Good luck with all of your investments.